Banks, I'll ask you a different question. Banks appear to have accepted that a ring fence is going to be imposed, somewhat grudgingly. Do you think the right incentives are in place on them to work, to make sure this works in the long term? And do you think that there's a case for putting on a contingency basis at least implicit scope for full separation onto the statute book, and put that in the hands of the regulators, perhaps with some checks, political checks and oversight before it could be triggered, in order to make sure banks don't engage in a war of attrition?
Well, I mean, for me, if you'd like, I'll cover them, Mr. Chairman. There are a number of disadvantages in full split compared with the ring fence. The main reason I would support a full split would be if I thought a ring fence was unworkable. I don't think that. I think a ring fence is a superior solution. But if it were put in place and proved to be unworkable, because of attrition, as you call it, then indeed there would be a case for going further. But I don't start from that. I think the ring fence. I mean, people have pointed out to you, distinguished people giving evidence to this commission, that a ring fence could be permeable, and it's certainly true that there might be an awful lot of people out there who had an interest in making it permeable. Equally, if you give the regulators the powers that, as I understand it, the draft bill foresees that they should have, and if you give the board of the ring-fenced body the duties that it's foreseen they should have, I think you have some pretty strong defences in place. Fences need keeping up. I mean, whether it's a garden fence or a ring fence, they need work.
And you're confident that we've got this fence at the right height?
Well, a lot of thought went into the Commission's work. I was looking at the book this morning. There's a list of detailed stipulations on page 73 of our final report, which I draw to the Commission's attention. There are, in particular, intended to prevent the investment bank or the non-ring-fenced organisation from improperly leveraging itself on the back of the ring-fenced bank's assets. And let's remember too, of course, that we're not recommending a ring-fenced bank in isolation. I mean, the whole world is moving towards much tighter capital standards, thank goodness. So they will also be in place, both inside and outside the fence.
But it's a major problem. And Paul Volcker says, as you may have read his evidence, that he doesn't think that anything short of full separation will be impermeable over time. It might be to begin with, but ways will be found around it. You, however, have just said to us that you think that full separation would be a disadvantage. Are the disadvantages of full separation so great that they outweigh the risks, huge risks, bearing in mind the cultural dimension, behavioural, of a ring fence being permeable over time, holes in it? And what are these huge disadvantages which you see?
Well, I was certainly very struck by, in particular, one thing in Paul Volcker's evidence, which was his description of the erosion of Glass-Steagall before Glass-Steagall was eventually abolished. And perhaps we should come on later in this session to some of the detailed changes that the government has made to the Vickers proposals, in particular the question of derivatives in the ring fence. I think there are two mistakes, it seems to me, that many proponents of a full split, I'm sure not you, Nigel, make. They start with two fundamental ideas that I think are wrong. One is that retail banking is safe and investment banking is dangerous, the utility casino thing. Retail banks go bust as frequently as investment banks. The Irish events recently were not an investment banking problem. Northern Rock wasn't. I don't need to labour the point. And if you have a full split, you remove the possibility, which may seem comical to the Commission, but to me is a real possibility, that in a combined group where the retail business, the Ringfence Bank, got into trouble, it would be bailed out by the other side, by a mega bank, so to speak. And if they're sharing a brand, that's certainly what would happen. I mean, one sees banks go to enormous lengths to protect subsidiaries or commitments they've made that have their brand on. And if you look at this with the optic that the investment bank is the only dangerous thing, you could make, I think, quite a bad mistake. I don't terribly like the idea. I mean, if we did enforce a split in the UK, you'd have a rather strange ecosystem. You'd have very large, very highly correlated retail banks with no earnings diversification from elsewhere. And I don't think that's a particularly good idea. The second error that people are prone to make is that somehow splitting is simple and a ring fence is complicated. In fact, if you're going to split, you have to go through all the complexity that we've gone through the ring fence to decide exactly where the split ought to come. You'd have just as much regulatory complexity, and of course you'd also risk putting it in the wrong place. And I think that it is possible that if the industry is unreformable, and I hope for its redemption, but if the industry is unreformable, that in the end a full split will be necessary. But having had a ring fence in place to start with would be a jolly good place to begin. We also were aware, if I just may, we were also aware of the deep difficulties under European law of mandating full separation. One would have to get European banking law changed. And if one couldn't do that and did it in one country, it seems to me that the constant threats that some of the banks made to us throughout our work, I think they demeaned themselves by making these threats, that they would leave the country if they didn't like what we came up with. Had we mandated a full split, I think one or two banks could reasonably have asked themselves whether they ought not to move. As I think the solution that we have put forward, you said at the opening, Mr. Chairman, that the banks seem resigned to the ring fence, suggests that we've got to a place of balance.
Well, may I put to one side the question of whether the banks, if they don't like what it would go away. That's something which this Commission will no doubt look at, but this is not for today's session. And also the question of European law, which you raise, is an interesting one. We will no doubt wish to take advice on that, but this is not for this session. I have to say that I don't see why it is any more difficult to decide where a split should be than decide where a ring fence should be. It seems to me it's exactly the same question.
It is the same question.
So it's neither easier nor more difficult. It's the same question.
But harder to correct if you get it wrong.
As for the cultural thing, I think some of us find it difficult to conceive how there can be two diametrically opposed cultures within one and the same institution, with incidentally one and the same group of shareholders. But what concerns me is, if I may say so, Martin, is a slight lack of historical perspective. In this country, we used to have a complete separation, not through legislation, but through custom and practice. The clearing banks, joint stock banks, were completely separate, with a separate culture from the merchant banks, as they used to be called in those days, as you well recall.
Indeed.
And it worked pretty well. And not only did it work pretty well in the sense that London was a great financial centre and British industries and British customers were well served, but and contrary to what is often implied, may have been implied to me, we never had a serious banking failure. During the whole that, this is the first one we've had, unlike other countries. We had none during the 1930s. America and continental Europe too had a whole lot. The system actually worked pretty well. And so it seems to me that I am not convinced that you have, with the exception of the, if they don't like it, they may up sticks and go elsewhere. I don't think you have really answered my question of what are these overriding disadvantages of a full separation.
Well, the question was not whether full separation might not be desirable for some banking groups. Indeed, it's a question that frequently crossed my mind when I was chief executive. It's a question of whether it should be mandated by law, it seems to me. It is open at the moment to organisations to split themselves up if they decide that the ring fence undermines the principal reason for their being together. And it certainly undermines a principal reason for their being together. Should we force them to do it when we have what we believe is a completely workable solution? I don't know. I think your point about banking failures in the past, or the absence of banking failures in the past, we had a very different kind of regulation in the past, didn't we, too? I mean, one of the things that that Alan Budd discusses in his paper is the enormous power of the Bank of England over the banking system, and its deep knowledge of what was going on day by day in a system that was still largely national. This was a national system with international financing going on out of London, but these were British banks. We live in a different a different world now, and a lot of the major players in the markets, of course, aren't even under the local regulators' purview. We clearly haven't got this right, but I don't think that it's necessarily the case that going back to the old structures would make this problem go away, because I think there's more to it. I think there are more contributing factors than structure.
But I think, lastly, I mean, you put your finger on something, because it is the case, isn't it not, that the investment banking sector is much more international than the utility banking sector.
Indeed.
And you say that national banks, as it were, are easier for the authorities with Bank of England to supervise effectively.
Yes.
And they also are slightly less complex organisations in other ways. So if you had a full separation, you then are likely to get a much more effective form of supervision on the section of the banking industry which is most important because of the payment system, because of the depositors, the small, medium-sized enterprises, and so on. So in fact, your analysis would, it seems to me, reinforce the case for a separation, because it would ease this supervisory problem to which you correctly allude.
I believe that the ring fence will do that job well enough. I think that the ring fence bank will give you the benefits of simpler supervision without going all the way to a full split. So my opposition to a full split is that I do believe it makes the financial ecology slightly less stable, and I think it's unnecessary because I believe the ring fence can be made to work. If I didn't believe the ring fence could be made to work, I mean, let me be clear about this, if I didn't believe it would work, then I would be voting for a full split too, but I do.
Clarify. Are you saying that you think a full separation would be as difficult to police as a ring fence?
No, I'm saying that a ring fence bank would be as easy to supervise as a separated retail and commercial bank. I don't think there's a further benefit in supervisory simplicity and transparency from going all the way.
Very nearly the same point. You're just wording my question
just looked at it
slightly differently.
in a different way. Mm.